over this past week, and it came a week late. So I said, hey, hasn't happened yet. I'm still not sold. I think we're going to get a pullback. We're now within 1% of the market open of the year. So Dan says it's been a rough last 2 weeks. It definitely has been. Actually, as a matter of fact, normally I love to get on here and tell you about how much money I'm making from these sessions. 4 or 5 weeks in a row, we've been cashing out 1,000, 2,000 bucks a week. It's been awesome. I'm currently down $1,655 on the trades from last week. So hey, winners and losers happen. But yes, this was the prediction from last week, and it's been in line with this seasonality. And for a little bit there, I was starting to think, maybe it's not going to happen. Maybe this February pullback isn't going to come. But if you look at the markets right now, let me just go ahead and pull them up. And I'm going to be very candid with you guys today. This has been a rough week for me as well. So here's the S&P 500. I've been calling for this pullback for the back half of February. I told you it's typically the worst time to be long stocks. Actually, let me show you guys this chart. This is all stuff we cover in Thursday, and I'm on a long-winded rabbit trail here, but I'll explain what I'm going to say in a second. Here has been since last Thursday session, just a straight pullback downwards. Anyone in Bitcoin? I'm heavily invested in Bitcoin. Terrible bloodbath today, down 7.5% on Bitcoin today. I've got a lot of money in Bitcoin. This is not fun. Now, granted, I bought way back in here, actually probably back in here. So I'm up nicely, but hey, it was a lot nicer before pullback. Now, I just bought a ton of this stock, ANET. I bought it right here. It's down about 10 to 15% since I purchased on a stock. Definitely a painful time right now. Now, what do I believe is going to come next? Uh, Let me go ahead and show you this. So here's where we are now. I'll just draw a fake line here again. I kind of estimate this. This is about where we are now. Look how steep that drop was on our seasonality. If you guys have been following along week after week. But look what comes here: March, April, May. Bullish. Bullish. If we look at the monthly charts, March, April, May, bullish, seasonally speaking. Let's look at the sector charts. March, April, May, bullish. And I'm just flying through this. This is stuff we normally cover in the Thursday sessions. Check out the Fear and Greed Index right now. We monitor this to see when's a good time to buy. I say always buy in extreme fear. We just hit it today. We just hit extreme fear today. So I think that this is going to be a great buying opportunity right now. This is what I've been talking about for weeks, where I've said lighten your position sizing. Granted, I should have followed my own rule this last week with ANET. I didn't. I bought a ton of stock, and I'm down pretty big on it. But I do think everything's going back to all-time highs here very soon. And I genuinely believe that based on the data, based on what we've seen here, seasonally speaking, what we've seen with new presidential cycles. This is a good, healthy flush out, in my opinion. Now, the reason I bring this up today, and I asked you guys in Telegram, um, the reason I bring this up is I've been covering this every Thursday, which has been really great, I think. I hope you guys have been enjoying it. The problem is that maybe I cover it Thursday, which means Friday's the only day left to trade on the news, and then the weekend comes, you kind of forget stuff. Things change over the weekend. Tariffs happen, deep seek happens. Who knows what happens? And by the time the next week rolls around, it's kind of been forgotten and lost in the mix. So what I would like to do going forward, and hopefully this is okay with everyone here. Generally speaking, majority said yes in Telegram. I'm going to be doing the market outlook sessions on Tuesday morning. So this time slot on Tuesdays, I'm going to give you my outlook for the rest of the week and going into next week. That way you have 4 trading days still left in the week to take action on it versus kind of doing it at the tail end of the week. I think that might be more beneficial. Of course, I'm going to cover stocks on the hit list as well too, and we'll do some trades, all of that good stuff. And then what I'll do is move the training sessions to Thursdays. So again, I'm going to be doing these market outlooks on Tuesdays now, starting next week, and then the trainings will be on Thursday, kind of to wrap up the week. Much better plan. Perfect. Thank you, guys. Great. Awesome. Hey, Babette. East Road says buy more. Yeah. So this is my buying spot here where, I mean, you can wait for a base. Um, Seasonally speaking, it says buy the first of the month. But look, guys, I'm very bullish on this market as a whole. I'm actually very bullish on what's going on politically speaking. I don't think that I know that there's a lot of uncertainty, especially with the tariffs. But overall, I think we're in a really good spot to continue higher from here. I think this is a good, healthy flush out, good, healthy pullback that I've really just been wanting to see for weeks now. I almost feel like I was the boy who cried wolf, calling it for a couple weeks, saying, "Hey, we're going to get a pullback soon." We had choppy, 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 hit all-time highs, and then here we are to pull back and look at this. 593. We opened the year at 589. So we're $4 away on the SPY from the year open. That's less than 1% away from year open. That's a really big deal. Now, seasonally, we're still better off than we typically would see. Typically, we'd be about down here, which is minus 2%. Let's see where minus 2% would put us if we were following the typical seasonal pattern. That'd be about 12 under this number, so 77, 577. Seasonally, we should be right about here by this date. So there's still some room to the downside. This is a 200-day moving average I just threw it on here just to show you. I don't think we're going below the 200. Let me add the 50. We're probably going to go in what my old or my former mentor Roger, still kind of a mentor. I still listen to him. He still swings by the office all the time to let me know what stocks he's looking at. It's funny, we always seem to be looking at the same spots, but he calls this a twilight zone. So we're falling into the twilight zone, like we saw here between the 50-day moving average and the 200-day moving average. Twilight zone, buying opportunity. Twilight zone is probably going to be somewhere around here in the 580s. Or it could be right now in the 590s, but hey, I would not mind to be 585. That's the number I gave you guys a while back. 585 seems like a sweet spot to me. Bill says disaster, start buying puts. Could be. I am still in a net, Dave. Yep. I am painfully in a net at the moment. And I bought it right here, which doesn't look like much of a drop, but that's about a 12% drop on a stock. It's pretty big. However, I do expect a net. This is just my prediction. It's me put my money where my mouth is. I expect the markets to return all-time highs. I expect speculation to come back. I don't think we're done with Bitcoin. I don't think we're done with large cap tech. I think ANET's one of the stocks that's going to be here at 130 in a blink of an eye. Speaking of stocks gaining steam, let's look at Lilly. This is one that we traded a lot last year. Uh, Over and over again, all of last year we traded Lilly. It kind of fell out of graces, but it's resurging back, looking really strong. It filled the gap from its big gap down. I think that was in earnings. Let me add this back in. Yeah, from earnings. Filled that gap back. So this was looking really good. Might trade this one today after the training. Good question. Dave, on the clock stocks, why are there different tickers for January, February? I'm not sure what you're asking. Do I feel comfortable with Apple here going into Nvidia earnings? That's a great question. I'm glad you brought this up. In the Monday picks, I mentioned that I expected a sell-off this week. I expected a sell-off. Let me just put this in the chat. If you guys aren't in Telegram, make sure to get in Telegram. But I expected a sell-off this week because we have Nvidia earnings tomorrow after the bell, and then Thursday morning we have GDP. So we have like double whammy big news events happening on Wednesday after the close, going into the Thursday open. So that's why I said, hey, we might see some profit taking right now. Because like you mentioned there, Doug, some people might not want to own stocks going into those big events. Apple, though, I'm still bullish on Apple. I've got multiple trades on Apple right now. It definitely will correlate in some way or another to Nvidia, but I don't think it's going to be a one-to-one. Like you'll see the like AVGO will be a much tighter correlation than Apple will be. All right, well, let's get this party started. I'm already 10 minutes past start time today. I'm going to cover the wrap order again. It's been 5 weeks since our last training. I like to do this every 4, 5, 6 weeks because we have a lot of new traders coming in all the time. I want to make sure everyone's caught up to speed. Just curious here in the chat, if you guys know about the wrap order, don't post anything. If you haven't heard about the wrap order, if you haven't been to one of these trainings before, just go ahead and post a yes in the chat, just so I have an idea of how many new folks are here today, because I don't want to, do this wrap order training all the time if you guys are already familiar with it. So we got 3, 4, 5, 6, 7, 12. Just reading the chats here. Quite a few people who are new. Okay, cool. So our timing should be pretty good then. Scott, you know it. There you go. Steven's already familiar. We still have quite a few new people. So today I'm going to show you guys how I target around 100% return on investment each week from a tiny move in the stock price. And then we're going to do one on Lilly today to just show you how it works. I call this a wrap order, and I'll walk through why here in just a second. But the really, really cool thing is that most people don't even realize that you can do this type of trade, and it might, sound scary. It's a spread. Everyone here spread and runs for the hills. Guys, this is not scary. It's a basic trade. You're just buying a call and selling a call at the same time. Who here has ever bought a call option before? Let me know in the chat. Ed, I've asked you numerous times how to play gaps, either down, up as far as trading. Ed, just real quick here, let me just show you Lily. This is how I play gaps. Gaps down on news, Ed. Here's the high price of the gap day. I wait for the stock to break the high price, like it would have here. February 6th, you would enter long, and then your profit target here is the low of the gap day. So 897, which it hit today. So Ed, gap down day, take the high price, fill when it breaks the high price, sell when it closes the gap here. All right, there's my brief thing. All right. How many has ever traded call options? Everyone here has traded call options. Today, you're just going to buy a call option, and at the same time, you're going to sell a call option. It's not that difficult, not that scary. You will need level 2 in your brokerage. Some may require level 3, but this is just a very basic form of options trading. So don't hear spread and run for the hills. It will revolutionize the way you trade and hopefully your results as well. So my name is Graham Lindman, and today I want to share with you a very special type of options trade that can completely transform your trading experience like it has for me. Again, always targeting right around 100% weekly return on investment. Sometimes it's 80%, sometimes it's 90, sometimes it's 120%, but somewhere in that 100% ballpark. And it's worked out for quite a few other people as well. I'm sure a lot of the folks are here in the room right now. Now, it's a unique way to target right around 100% each and every week from a tiny move in the stock. And I really do mean a tiny, tiny move, normally less than 1%, normally in about a 0.5% range. So again, that's not a 1% range. That's not a 5%, that's a 0.5%. So like Eli Lilly right now, let me just go ahead and tell you what it would be. When we do a wrap on Eli Lilly here in a second, we're going to need a $5 move on a $900 stock to double our money. To give you an idea, that is a 0.5% move on the stock to double your money. So we don't need it to shoot to the moon. We only need Eli Lilly to go above here where the crosshairs are to double our money. Tiny, tiny move. I'll cover this in a moment with Eli Lilly specifically. But really quick, let me ask you, who here thinks they know how to turn a 0.3% move or a 0.5% move in a stock into a 100% gain? Does anyone here know, outside of wrap orders? If you've been here before, don't cheat. But for the new folks here, does anyone know how to turn a 0.5% move in a stock into a 100% gain? Actually, does anyone here know how to turn a 1% move in a stock into a 100% gain? No, 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 nobody. Because it's impossible, right? Seriously, no one knows how. It's impossible to do with normal call options. If you're just buying basic calls like everyone else, you're never going to be able to see those types of results. Now, with normal options, you typically need a 5 to 10% move in a stock to see that type of return, but I'm able to do it when a stock gains less than 1%. Now, I've been trading this way for years now, and my original portfolio trading these wrap orders has been on absolute fire. You've probably heard me talk about the perfect income trade before. 70% win rate. I don't try to be perfect. I try to bet around 70%, 41% average weekly net return. That's including winners and losers. We're averaging around a double every time we're right. And when we lose our money. That's okay, but we're winning 7 out of 10 times, which averages out to 41% a week. That's insane. This account growth in the first year, 2,280% account growth in 1 year based on no compounding. That's just starting out with 5K and just you would get the same number if you start with 1K, but just staying consistent every single week. Now, I'm not kidding when I say that these wrap orders may be the most powerful tool in your options trading arsenal. And it's a basic debit spread. It's not scary. I know a lot of people hear spread and they get freaked out. They run for the hills. I'm here to tell you, I'm here to beg you, plead with you. Stick through this, watch it a few times if you have to. It is so much better, generally speaking, than just trading basic call options that I need you to learn it. Now, in essence, we're able to drastically reduce our risk. We reduce our time decay premium, and that reduces our cost of entry. That's a win-win-win, right? While at the same time, we increase our win rate, increase our profit factor, and increase our net return. That's six reasons right there why you should absolutely at least learn this method. So let's dive in. Now, in my programs, I've already covered basic options that we can use, buying calls or buying puts. Everyone here, I think, has used calls and puts. Calls you win if the stock goes up, puts you win if the stock goes down, and that is in theory. The problem with buying premium is that you pay for what we call time decay. In essence, when you are buying a call option and you think a stock will go up, the problem is the longer you hold it, the more time you're holding it, the more that time premium loses value. Think about it. If you buy an option on Apple and it has a year till expiration, there's a lot of opportunity for growth in that window. Versus if it has a day till expiration, there's very little that it can actually do. It's not going to double in a day. It could double in a year, so you're going to pay for that premium. It's not going to double in a day. So if you buy it for a year out and you hold it for a year and it barely moves, you're going to lose so much value in time premium. Same goes for 30 days. The closer you get to expiration, the worse it is. And that's why sometimes you can be totally right about the direction of a stock. You can be correct, called on the nail, and still lose money with call options. For example, one of my trades on Apple in the past, I entered on September 20th. Apple gained 2.6% on the stock. I was right on the stock. Woohoo, let's go. Oh, let's not go because my options lost value. 19% loss on the call options. How does that make me feel? Makes me feel like I'm running into a brick wall. Nothing's worse than being right on the stock and losing money on your options. The truth is, if I'm trading a stock like Apple and holding for 30 days, I need at least a 4 to 5% move just to break even on my investment. That's a big, big move. Now, you probably won't hear this on YouTube or CNBC, but I'll tell you the truth. Buying calls or puts straight up stinks. This is generally speaking. Now, there are some exceptions that I will cover where you have a strategy built with odds on your side where you know there's going to be a huge outsized move, like my perfect Apple trade. However, generally thinking, buying calls and puts is no good. In fact, you may have heard this stat before, but the CME discovered that up to 76% of options lose money. So you're already 3 out of 4 options lose money. That's not great odds when trading, and it can be so frustrating when you're right on the stock and your call options lose money. So do you see why trading basic call options can be a losing proposition? But now here's really important. During that same stretch I just showed you with Apple, where I was right on the stock, call options lost money. During that same exact stretch, I used the wrap order as well. And over that 4-week stretch, I had 4 weekly opportunities, just one per week. Week 1, doubled my money. Week 2, I lost it, right? We're going 1-to-1 risk to reward. We're looking to win more than when we lose. So week 1, we double our money. Week 2, we lost the investment. Week 3, 85%, and week 4, 110%. So that's a net 193% gain over that time period. And yes, this is a real life example, real money trades I took in my own brokerage with my own account, real fills, everything. So what would you prefer? Basic call options lost 19%. The wrap orders, just applying the same trade every single week during that same time frame, made 193% return. It's not a quick trick question. Which one would you guys prefer? Let me know in the chat. Would you want the call options or the wrap order? I'll go over how to close it. East Road. We got one for wrap. One vote for wrap. 2, 3. Oh, call pink sparkles. Says call options. Wraps all day. I love it. A lot of wrap. Exactly, guys. This isn't a trick question. Over time, I've tested this for years now. Really cool. There's a lot of really cool options testing platforms now, actually, that we didn't have before. We used to have to test it by hand. Both show that these wrap orders are by far superior. So how does the wrap order work? Well, I'm going to walk you through it step by step. And again, it may seem complex at first, but once you get the hang of it, they're very easy to do. Again, raise your hand. Have you ever bought a call option before? That's all you're doing. You're buying a call option and you're selling a call option at the same time. It's not that hard. So, plus the session will be recorded for you to review. So, wrap orders are a simple debit spread. However, I call them a wrap order for a reason. So it's a little naming convention, so we always know which strikes to pick. We call it a wrap order because we always wrap the current price of a stock with 2 strikes. So, for example, I keep using Apple, but just play along with me. This is theoretical. If Apple's at $100 and we think Apple's going to go up in value, we would wrap the current price with the 99 and 101 strike call option. So Apple's right here, and we're just going to wrap it. That's why we call it a wrap order. We're not trading the strikes up here. We're not trading the ones down here. We're always wrapping the current price of the stock. And then we win if the stock finishes above that higher strike. So again, Apple's at 100, trading the 99 and 101. See, we're wrapping it below and above. And we win if Apple finishes above 101. Now, here's what the order would look like. And again, this is a theoretical example. You would buy the one strike lower, sell the one strike higher, wrapping the current price of the stock. Now, you should always look to enter for around half the difference of the two strikes. So this is how much you should pay to enter the position. Again, if you're trading a basic call option on Apple, let me just go look at the weekly call options right now, and I'll give you a number. Weekly call options are $510 right now on Apple. We're going to enter for about $1, so about 1/5 the cost. Like I said, cost of entry, way lower. So when you wrap it, to pay about 1/2 of the difference here. So the difference is $2. 99 and 101, difference is $2. We only want to pay $1 to enter, or around there, 101, 102, 103, or 98, 97, somewhere around that $1 range. So again, we always want to enter for roughly half the difference of the strikes. That would be around $1 debit to enter. If you punch it in and you get a credit showing up, you probably did it backwards. You buy the one lower, sell the one higher. So again, how many of you, if I do this, if I said this, everyone would say, oh, this is so easy. This is absolutely, just anyone could trade this with their eyes closed. Just doing the same thing. We're just buying one and selling one. Not difficult at all. Now, the most we can lose here is the amount we pay to enter. So people hear spreads, they think you could lose unlimited risk. No, no, no. This is just like trading a call. The most you can lose is the amount we pay to enter. So if we pay $1 to enter, the most we can lose is that dollar. Just like trading basic call options, no different. Now, the most we can win is the difference of the strikes. So remember, the difference of the strikes is $2. So we can buy it, we can enter for $1, and we can sell it for $2. That is a doubling of your money, right? $1 to $2, 100% return. So if we're wrong, we lose 100%. Just like if you're trading call options, if you're wrong, you lose 100%. If we're right, we win 100%. If the stock stays flat, we'll actually break even, unlike normal call buying, for the most part, depending on the current price, but somewhere around a neutral position should break even. So wrap orders are designed to be as close as possible to 1-to-1 risk to reward, meaning you bet $1 to make $1. So if you lose your dollar. Now you just want to win about 70% of the time, which we've been doing. In other words, risk $100 to make $100 in profit. Now the reason why the 1-to-1 risk to reward on wrap orders is a winning proposition, in my opinion, is because stocks tend to go up over time, right? Does anyone here debate that the S&P 500 over the last 25 years likes to go up more than it likes to go down? It's not really up for debate. Same for Apple, same for great stocks like Nvidia, Amazon. Actually, we've got a lot of questions here about expiration date, which I'll cover in a moment. The craziest thing to me about wrap orders, let me just do this real quick. How many down years has Apple had in the last 20 years? Let's see what Google has to say. Apple has had one downturn, down year. Let's see, Apple stock. Let's see it, make sure. I was hoping to show you guys. We'll just call it two because we have 2008 and let's say 2022, just for safety. So that means 2 out of the last 20 years was down on Apple. The crazy thing about wrap orders is you can trade them for a week expiration like I do. You can trade Apple a year out. So I can go here to Apple. I can look to next year's expiration and say, will Apple be higher this time next year? Yes or no? I can place a trade here where I double my money if Apple just goes up at least what is it, 2% over the next year, which it normally does. So you can do as long as timeout as you want, or you can do short dated, which I'll show you. So the reason why the wrap order is a winning proposition is because stocks tend to go up over time, meaning we can generate casino-like odds just by being consistent with our trades. So how do we win? We win if the stock closes above the higher strike in the wrap order, and we will make around 100% ROI. So in this example, we win because remember, Apple is at 100. We're wrapping it with these two strikes. We win if Apple goes above. We win 100% if Apple goes above that higher strike, 101. Now, to help solidify the power of wrap orders and why they're so much better than normal options buying, let's walk through some scenarios to compare the power of wrap orders with call options. So, 6 scenarios here we're going to walk through. And remember, in this example, we're saying Apple's trading at $100 and we're doing that 99-101 wrap. So, scenario one, let's say Apple drops below $99 by expiration. With call options, you lose. With the wrap order, you lose, right? Both of them lose. Scenario two, Apple stays flat at $100 by expiration. Call options, you're going to lose because the time decay. Remember, I showed you that example before where it went up 2% and I still lost some time decay. Well, if it's flat, you're definitely losing on time decay. With the wrap order, you're going to get out break even or right around break even. Let's say scenario three, Apple goes to 150 cents by expiration. Barely moves 50 cents. Call options, you're going to lose on time decay again. With the wrap order, you're actually going to make about a 50% ROI. Think about that, a 50% gain on a 50-cent move. That's unreal, but it gets even better. Let's say Apple goes to 101. It makes a dollar move by expiration. With the call option, you might get lucky and break even. I would go ahead and guess you're going to lose money on time decay, but we'll go ahead and give it the benefit of the doubt. Say you break even. With the wrap order, you're going to double your money. You're going to make 100% ROI. Scenario number five, let's say Apple goes to 103 by expiration. Well, with the call options, you'll probably make 20 to 30%. You know, a 3% move in a week is pretty good. With the wrap order, you're going to double your money, so you're still going to do better. Let's say scenario number six, Apple just gets some crazy news or something and goes up 10% in a week. Very rare scenario. With the call options, you're probably going to outperform the wrap order. You're going to make 100% plus, probably 100, 200, maybe 250%. Wrap order, you're still going to double your money. But this is a very rare scenario. Probably once a year this might happen. So in conclusion, 6 different base case scenarios. With basic call options, you have about 33% winning odds. 3 lose, 1 break even, and 2 win. All right, we can just see this here on 3 very basic scenarios. However, with the wrap order, just blindly trading, you have 67% winning odds. 1 lose, 1 break even, and 4 chances of profiting on these 6 scenarios just by option selection. So that's casino-like odds simply by staying consistent. So to recap really quick, if Apple's at $100, we would wrap the current price with the $99 and 101 strike call options. You would buy the one lower, sell the one higher, and you want to enter for about half the difference of the strikes. So it's a $2 difference between 101 and 99. You want to pay half that, roughly speaking, to enter. So $1 to enter, about half the difference of the strike. So if we're looking at it visually, let's say Apple's at $100. We think it's going up. We're going to buy the lower call, sell the higher call simultaneously, same ticket. Again, if you've traded a call before, if you bought and sold calls, you've basically done this. Now you're just going to put it on the same ticket. Then we wrap the current price of the stock, hence the name wrap order. If Apple closes above 101, in this example, we make 100% ROI. That's only a 1% move on the stock, and we double our money. How do we calculate risk to reward? If you have Thinkorswim, it does it for you. If you've done a few of them, you probably can do it mentally. I also have order calculators in all the members' portals, and I'll cover this in a moment. But first, let me give you another practical example. In my On the Clock Stocks program, I had a trade on Google. First week, Google shot up 2.1%. That's great. For the members, I issued both the call options and the wrap order just to show you guys the power of it. And then the first week, the call options were up about 30%. Let's go. That's great. The wrap order was up 81%. Same move, same time period, just different options selection. And all I needed was about a 0.7% gain in Google stock by that Friday to make my full profit potential. And then if Google was still bullish at the end of the week, I can enter the position again for the next week's expiration. That's the other beautiful thing, targeting another 100% ROI. Remember I showed you that Apple example earlier. I'll pull it up. When you're in one of these bullish trades, you can just apply one every week if you want to. Now, you can go a longer expiration, or you can just go weekly and let them stack up, knowing that one's going to lose, a couple are going to lose, but hopefully you win more than you're losing. In this case, 3 to 4, and we net a nice big return. So, same case with Google. Google, we did 81%, right? And if it was still bullish, which it was, I could do it again. And that's exactly what happened. I did it again the next week and made 100% on Google. So that's 174% total return in 2 weeks. Now the call options did great for the members, 132%, but the wrap orders still far outperformed. 132% gain on the calls, 174% on the wrap orders. Still outperforming a very, very bullish scenario. And if the entire wrap order is in the money at the end of the week, Your brokerage should automatically exercise both sides and offset the calls for a max profit. Now, if the spread is in the middle, then we can exit our call or our spread early on Friday before expiration. And in that case, if it's in the middle, you should still get around a 50% ROI on a small move. Now, of course, in my premium alert services, I do all the heavy lifting for you. I'll send you the entries, calculate the odds, give you the exact options, and follow up with exits. But if you'd like to manage some of these trades on your own, let's check out the calculator. Let's go ahead and dive into the one-click trading portal, and we'll take a look at Lily for an example. Let me go ahead and catch up here on the chat, and then I'll jump into Lily. Jim, do you ever go 2 to 3 weeks out? Yes, I will. Jim, sometimes my lightning trades I'll do a month out. So like I said, you can pick pretty much any time frame and get very similar odds of that one-to-one risk to reward, which to me is just crazy, especially when we're talking about a stock like Apple, which has gone up 9 out of every 10 years. That should not be a one-to-one risk to reward ratio. Now, just a fun note for you guys. It's not really fun. They've priced this into the ETF, so you can't do this on the SPY. You can't do this on the QQQ with that one-to-one risk to reward. You'd have to go more out of the money. But as far as individual stocks, it's not priced in. Priscilla, do I ever wrap seasonality stocks? Yes, I do. Why does Nate use the closest two strikes above? It must be how he picks his trade, administrator. Can you do this going short? Yes, you can. Same application, just do it with puts. Buy the one above, sell the one below. In the short term, everything can go down. Seems like it is right now. Definitely does seem like that, Keith. Although I'm getting bullish right now. I will show you how to compute it. Yes. Do I consider IV with these trades? Great question, Jackie. So let's go to like Tesla, who's a pretty high IV. So you might think high IV, it's going to be more expensive. Worse odds, right? IV on Tesla for the weeklies is 80%. That's really, really high. The thing is, Jackie, when I'm buying this one and selling this one simultaneously, the beautiful thing is I'm offsetting the IV. So IV's at 80%. I'm selling one for 79%. That takes my net IV down to 1%. So I pretty much negate IV when doing this. IV is implied volatility for anyone curious. That's basically how expensive are the call options. So these are very, very expensive options. But by buying and simultaneously selling, I am netting out the difference and pretty much eliminating implied volatility, which is one of the beautiful things about this. JT, if at expiration the price of Apple is above both wrapped ordered strike, do we keep all the premium or must we close it out? JT, I let it expire on its own. The brokerage offsets it and we get the difference. We get the full profit, is what I should say. How do you avoid time decay if you have an expiration date within the week? Daphne, same thing here. By offsetting the IV, we're avoiding the time decay. We're buying this one and then selling the next one, which completely wipes out the implied volatility or the extrinsic value. This you can do bull. Mike, you denied level two trading, but can trade bull put spread because of cash balance. Would you do bull put? You can do bull puts, but Mike, your brokerage won't let you do bull call. Ask him if you can do a bull call spread. That's what this is. Uh, it should be even safer than a bull put. Dave, the on the clock stocks calendar is going back 10 years. So I'm not sure where you're getting 2004 and 2005 from. Do you let the trade expire or set it close? Bill, great question. I let it expire. Overall, it's better risk to reward, better profitability. However, you can set a profit target. Glenn, if can you be assigned if it's at a loss at expiration? So if it's below both strikes, they both expire worthless. How do you make more than 1% or 100%? I will show you here in a second. This is a vertical option, Wally. When you had a wrap on Amazon, Savannah, you got put the stock. Did you do puts or did you do the calls? Robert, if it's between the strikes, it shouldn't be a half a cent. Can we do this tomorrow on a video for earnings? We can. Savannah, if it was a long call and it was Friday, let's say here it was Tesla and you had the 305, 310, and Tesla's at 306. If you don't close it out, you will automatically call your 305 strike. So you'll get Tesla at 305. And you can immediately sell it at 306, which would give you the difference there. I just prefer to sell the order completely before about 3 o'clock. Do I look at volume and open interest? I do. I definitely try to avoid like in the NAs of the world. So like see these NAs on volume. Open interest, I'd like to see it. I would love to see 500 and above. Sometimes I don't get it. But it unfortunately limits a lot of our stock picks. Like I could probably get filled on this, but it's not going to be super easy versus like Meta. Let's see Meta. Oh, Meta's down today too. See how this one, a lot of volume, a lot of open interest. But I typically would just avoid the NAs. Oh, thank you, David. All right, let's walk through a practical example. uh, I've updated a lot of the one-click trading portals. I haven't been able to get to all of them yet, just been busy. Hopefully you guys like how it looks now. But let me just go ahead and pull up the hot sheets. Oh man, I just clicked the wrong thing. So these calculators will be in all of your members' portals. Here's the new layout look for the members portal. All right, so if we're gonna go down here, I put it right here. See wrap order, can't miss it. Click that. And then this puppy, once it loads, my internet must be slow today. All right, I'm ready to roll. So let's do one on Lily here. Calendars are available for download at the bottom. Oh, awesome. All right, let me go ahead and pull up Lily. Let's just see how the stocks are doing right now. Oh, ain't it, my good friend. Bitcoin, any bounce back? Nope. SPY, still sinking. Ooh, QQQ still sinking. All right, let's take a look at Lily. Up nicely today. Filled the gap, breaking out. Looks to be doing good. I'm going to go ahead and trade the wrap order. Current price is 903. So I would look to wrap the current price of the stock. Now let me see what happens if I go a week out. Let me tighten these up. Not very good volume. Oh, wait, I went to 2026. All right. All right, this should work. So we're going to look to wrap the price of a stock. So what we would do, price is 903. Here's our strikes. Does anyone know the two strikes that wrap around this current price? Not a trick question. Obviously, the 900 and the 905 would wrap the current price. So we'd always buy the one below. So you'd buy the 900, you'd sell the 905. Now I did this for next week's expiration just to give us a little more time. I will type this up for you guys, but let me first punch it here in the calculator. And it's currently trading at 245 debit. All right, everyone see that? So when you come to your calculators, we'll just punch in here, strike price bought, right? And is it going to work for me? It's a question. Huh. It's like frozen. I think my internet's jacked up right now. Is the feed coming through okay for everyone? Hmm. Let me switch to a different one. Is everyone's wrap orders working for them? So again, all the portals should have it. Weird. I don't know why that one wasn't working in the hot sheets.
I'll let Ilyana know. I think she mentioned there might be like server issues every now and then where it has to
Okay.
just like get refreshed.
Okay, cool. All right. So let's take a look at this, guys. We're buying the 900, selling the 905. We're wrapping the current price of the stock, right? 902, we're going to buy the 900, sell the 905, wrap the price of stock. Current price is 250. It just moved 265, but we'll just say 250 for example's sake. So now I punch this all in the calculator. We'll just say one contract for now. It'll tell us the total risk. Most we can lose, $250. Most we can win is $250. That's a double of our money, 100% ROI, and it gives us a break-even calculation as well. Let's say I wanted to do 7 contracts. I made up a number. Total risk, total income potential, it does it all for us. If you want to trade to the downside, you can do that too. The calculator's just below it. Now, some of you guys asked about profit targets. Maybe you want to go for a profit target. You can set an example target here, and it'll do all the numbers for you. Tell you your gain potential. If you want to say I want to set a $4 profit target, 60% ROI potential. Break even calculation, everything's done for you. Dave, wrap orders are great. I use them on almost every option I buy. Awesome, Dave. Howard, I did I'm doing the March 7th expiration. Let me just type this up for you guys if you want to take it. All right, we got Lily, 7 March. We're going to buy the 900. And guys, keep in mind the stock price is moving. It's a big stock. So just be patient. I'm just going to set my limit order at 250. Let it sit. There you guys go. We got 4 of those. Let me just set it at 250. The price just moved up. So the price is moving here a little bit. But Thinkorswim's pretty cool too. It also does the calculations for you. Max profit, max loss. It'll show you the break-even price, I believe. Yeah, break-even, 902.50. Same exact numbers. Let it sit there for a second. Now, here's a cool thing visually on a chart. So we have till March 7th for Lily to get above here where my crosshairs are. Can everyone see this, where my crosshairs are? Does everyone see where Lily is now? Does everyone notice how Lily barely has to move for me to double my money? Got filled at 251. Nice. So do you guys take a look at the crosshairs? Imagine buying a call option and that's where the stock goes. You're definitely losing money. With the wrap orders, stock barely moves. It goes above there and you double your money on a great stock like Lily. How is that possible? That's what the market makers decided they wanted to do for us. Let me go ahead and go in here. 265. I'm just going to let it sit a little longer. Yeah, there's my trades, guys. Like I said, I normally, every week for the last 4, 5, 6 weeks, I've been up like, oh, shoot, how do I get rid of this? Been up $1,500, $2,000, $3,000. Currently down. Tough sledding out there right now. T-Mobile holding up for us, though. Oh, did Apple flip on me? No, it's not too much. What has NVIDIA done? Man. All right. Did everyone track with that? Do I need to go through that again? Nathan, it does need to get to. Nathan's asking, it doesn't have to get all the way to 905 by expiration for a full profit. It does. So 3/7, March 7th. What did 905 right here? You got them for 250, Bill? I haven't been filled yet. Yep, it needs to be above here, Nathan, by March 7th for us to double our money. Now you can set a profit target at 50% if you want, in which case it doesn't need to necessarily be above there. It needs to just move high enough during this time period where it'll fill us out. I should get filled here soon. Put a sell order at 502. You won't get filled at 502 because no one would pay that because the risk to reward would be negative for that person. RV Hannings. What determines the stock that you choose for the wrap order, Glenn? I typically use my trend filters. I use Newton. I use Apex. With like Apple, I have got the perfect Apple indicator. With Nvidia, I use Newton. If that answers your question. I'll also look at the seasonality picks. I look at on the clock stocks. I've got a bunch of different strategies that we can use to help find these stocks for wrap orders. Lily, I just noticed filled the gap today. Looks good. Again, it's one that we traded last year over and over again. Currently wishing I bought the dip here, but hey, you can't go back and be a Monday morning quarterback like ANET. Oh, this thing is just crushing me. However, did that all make sense for everyone? Oh, ANET is on my list, Chai. It sure is, and I'm in. And I'm currently sitting with pain with ANET. So let's cover some basic rules of when I like to apply wrap orders versus maybe avoid them. So the key to wrap orders is you need a strong stock with weekly options, right? You can do monthly options. Just want to be clear. You can definitely do monthly options, but I prefer weekly options because of the way that wrap orders are designed. Oh wait, the reason I like weekly options is because we can apply over and over and over again as long as the stock is healthy. So if a stock's going up for a month straight, we get four chances at it versus just one. The benefit is that we can trade some of the most expensive stocks for a fraction of the price. So, Lilly, for example, the call options for the expiration we picked are $2,000. We're trading it for $250. So 1/10, roughly speaking, 1/8 the price, just a fraction of the price. RV, if no one would buy it for 100%, how would we make 100%? Great question. If the price fills, or if the stock closes above 905 by the end of the next week, your option will be exercised. The 905 will be exercised. So you'll get to pocket the difference of the strikes, $5. On the calls you currently have open, can you add a second leg now to make them a wrap? You can. Just make sure to check the prices to make sure it makes sense. Would you set a target at 495? You definitely can do a 495 target. So, anyways, it can help us trade some of the most expensive stocks for a fraction of the price. I just showed you the Lilly example. This was an old one I had on service now. But again, instead of paying thousands of bucks and needing a big move to break even, you can get it for a lot cheaper and need a much smaller move or 0% move to break even and a tiny move to gain 100%. Just did a live example. So let's look at some extra rules. Rule number one, I typically avoid stocks under $50 unless they have 50-cent strikes. So I think what was the stock we traded? Hood is an okay one to trade because it's under $50. Normally I wouldn't trade it, but see how it has 50-cent strikes? That means it's okay to trade. Why? Well, if a stock has $1 strikes and it's a $50 strike, a stock, I mean, it needs to move a dollar for us to double our money. That's a 2% move. Versus if it has 50-cent strikes, it only needs to move 50 cents. On a $50 stock, that's a 1% move. If a stock gets more expensive, like the Lilly one that I just showed you, we don't need much of a move to double our money. That's why I like to use these expensive stocks. So like Lilly, we'll just say it's at 902.50. I know it's moving, but we needed to get to 905. It's currently at 902.50. We need Lilly to move 0.27% for us to double our money. 0.27, a quarter of a percent. That's why I like trading the bigger stocks, especially when they're good breakouts. The reason I like to avoid smaller stocks is the options aren't fractional. So again, the smaller the stock, the bigger the move you're going to need, typically speaking, unless the strike prices are cut down to 50-cent strikes. The same rule applies for more expensive stocks. But again, you just want to make sure that you're trading when you run the calculation, you want to have a shot to double your money with around a 1% or less move. So if the move is 2-3% to double your money, probably not a great stock to be trading, just because the options aren't great. Number two, know your limits and be consistent. First off, don't trade with more than you can afford to lose. There will be losers. We all have to be willing to accept losers. That's part of the game. There's nothing to freak out about them. But if you can find an edge with a stock that has weekly options, it can stack up over time, like I've done with the perfect income trade. Primarily trading Apple, but also trading some other bullish stocks. We've traded Lilly before, traded Kava, we've traded ANET before, traded a lot of different stocks in there. Rule number three, understand news and catalysts. So if it's Thursday and you're up 80% on your wrap order expiring Friday, but the Fed speaks tomorrow, maybe take your profits. I wouldn't risk a good trade on news that you can't control. Same goes for earnings events. Typically, I close out a wrap before earnings. Now, tomorrow we'll trade NVIDIA for fun on earnings. That's for fun. That's a key word there because there's not really, I don't know where NVIDIA is going on earnings. I'm not friends with the CEO of NVIDIA. So typically I close out before earnings. Rule number four, and this is a fun rule, pair wrap orders with your favorite strategies. For example, I showed you on the clock stocks. You can trade basic calls or trade the wrap order. Pair them with your favorite strategy. The important thing here, the wrap order is not a strategy, right? A call option is not a strategy. It's how you leverage growth on your strategy. So it's an option application on top of a strategy. So wrap order is not a strategy. On the clock stocks, seasonal picks is a strategy. And then I can say, let me add my wrap order on top of it to leverage the gains. Another example, like Newton. I use the wrap order when I'm trading with Newton as well. So sure, you can buy calls, you can buy puts, or you can use a wrap order. So as a quick recap here, with wrap orders, we wrap the current price of a stock with weekly option debit spread. I just got filled on Lilly. I heard it fill. Around 100% net gain by the end of the week with just a small move in the stock. For example, if Apple's at $100, you wrap by buying one strike lower, selling one strike higher, right? We want to enter for about half the difference of the strikes, which gives us a 1-to-1 risk to reward ratio. As long as Apple in that example closes above 101 by expiration date, we make 100% ROI. In the Lilly example, if Lilly closes by next Friday above 905, we double our money. It's a 0.27% move. So, question is, do you want the newest one? The newest wrap order for you. I've got the options criteria all typed up for you and ready to roll. This is in a premier service where I do the entry, exit, all of the work for you. And I'd like to invite you to join the team with a special offer you can't find anywhere else right now. And I would like to invite you to join the Perfect Income Trade. And before I do that, let me answer some questions here. I don't like to pitch super hard on here or anything, but I do like to give people the opportunity to join a service, especially when it's crushing. Again, we're averaging 41% returns per week, winners and losers included. So I'll invite you guys to join that in just a second. Let me first answer some questions. Filled at 253. Nice. Why not use the higher strike prices? You can use a higher strike price. You definitely can. We covered that. I covered that in the elite trade training, which will be coming up here in a couple of weeks, where you can get a bigger risk to reward. But you'll just need a bigger move in the stock. Buy to open, sell to open. Yes, Priscilla. If Lilly gets to 905 today, will I close it out? No, Dan. I'm going to wait because it's not going to move that much because there's still time left on the clock for the wrap order. Filled at 250. Nice. Exactly. It will be benefit of higher stock is the strike prices is wider, so you can get more contracts for less the price. Tim, deeper in the money has lower profit margins and out of the money has larger profit margins. That's true, Tim, but if you go deeper in the money, you're going to win a lot more than out of the money. So they all have their pros and cons. How would you close out early? If you just want to set an exit order good till canceled, just set it at a price that you like. Again, that calculator, you can punch in what price makes sense for you. Can you manually take a lesser profit? Yes, same thing. You would just set a good till canceled exit order. Everything is down. How can you find things going up? It must be impossible. That's a funny one, Gary. That's actually true. That's what a lot of people think actually. But if you check out this heat map, I just searched heat map and so check this out, Gary. So you think stock market's down big today, right? Most stocks should be down, right? Well, actually, in fact, if I can get this to pull over here, here's a heat map of the markets today. We actually have quite a few stocks that are up today. So Lilly's one of them. Look, there's actually a lot of green out there for such a red day in the market. The problem is the big stocks are the ones getting pummeled. That's why the market's down so big right now. Um, can I show you the math on how you double your money example? Um, Ellie, let me just pull this up again. So the Lilly example, the max profit we can get is the $5 difference here. That's how spreads work. Whatever your difference here in the spread, that's the max you can sell it for. On expiration date, if you're in the money, it'll automatically exercise both sides and you'll get the $5 difference per contract. If I pay 250 and it closes for $5, that's how I double my money. Hopefully that makes sense. Can I teach you how to do a covered call? I can. I'm not a huge covered call guy. I think it limits risk or limits upside too much. Filled at 242, filled at 245. You guys getting better fills than me. Yeah, Nathan, mags are down, but the rest of the market isn't too bad. That's exactly right. Does the strategy change during a true bear market? Great question. You can definitely flip it to the downside. My perfect income trade does, based on what's going on in the market. So, if you guys want me to do this for you every single week, well, each week I'll send you a new trade alert with the specific options criteria laid out for you on a silver platter. Each trade is designed to pay right around 100% ROI for the week on a tiny move in the underlying stock. No guesswork on your part, no crunching numbers or sifting through options, no running the calculator on your own, unless you want to, of course. But I do it all for you. I put my own money in these trades, about 1,000, 2,000, sometimes $5,000 a week, and I follow along with you. So I want them to work out just as badly as you do. So I'll send you the trade. If you like what you see, you can jump in with a few clicks of the mouse. Then you're done for the week. Enjoy a hike, catch a sports game, take the motorcycle out for a spin, whatever it is. As always, each Friday, I'll follow up in the morning to let you know if there's any action you need to take before the weekend hits. So we place our trades on Monday, and we don't day trade. We don't sit around and look at it. We just come back Friday to see how we did. So just hear what some of the members have been saying. Lefty says already in, averaging 750 a week for the last 3 weeks. Michael B, first week in the perfect income trade, he's up $1,000 on the Apple wrap trade. Richard said, being conservative, I made $2,820 in the last 2 weeks with the wrap orders. Loving it. Greg, currently a member, closed out SMCI for 100% gain, $2,650. Woohoo. Highly recommend getting in on this. Doug says if you're on the fence, 1 or 2 wrap orders will pay for the whole lifetime price, which to give you an idea, that's about $2,700. Don't miss it. Best program I have ever seen. Ed R says 2 months in, love it. Using the perfect income trade system, he'll be 7 for 8. Never happened before, fully on board. Jennifer, been trading for the last 7 weeks, averaging $8,000 a week with the winners and losers combined. Wow, that's nuts, Jennifer. Congratulations. Now, of course, you'll get the other membership bonuses too, including the trainings, calculators, so much more. And every week, it's my goal to deliver you the next win. And keep in mind, again, I have my own money in the trade too, so I want it to work out just as badly. I'm just as motivated to have these trades pay out as you are. Of course, while there'll always be winners and losers when it comes to trading, so far in a little over about a year and a half, we're hitting with a 70.3% win rate. Real money trades, real time, not a back test, nothing like that. Real trades, guys, averaging 41% per week, including winners and losers. Could you imagine if you average 41% a year? We're averaging 41% per week. And with results that good, it's no surprise we've been able to scale the model portfolio very, very fast. In fact, on my live trade alerts sent out to people just like you, we're currently sitting on $152,058 in profit in the model portfolio. This is not a back test. This is not some compounded crazy number made up out of thin air. Guys, not a back tested, not simulated results. These are based on the real alerts sent out in real time since I opened the service in October of 2023. And even better, or worse, if you didn't act last time, that's up $17,000 since I offered this to you a few weeks back in the opening playbook. Up $17,000 in about 5 weeks. And I'm not talking about compounding. I'm not talking about putting 100 grand in. This is based off 5K flat in each week. So if you started with $1,000, you're still up about 4 grand in 5 weeks. So $4,000, 5,000, 17,000, whatever you started with is what it paid out over the last few weeks. Now, in this case, $17,000 in under a month. So again, please, I feel like I'm twisting your arm, but I think I'm doing it for your own sake. This is definitely a program you want to be a part of. The track record is just too tremendous. The trades are a lot of fun. They're very easy to set up. Again, you place them on Monday and you just check back Friday. Nothing crazy. Very passive. In my opinion, the risk to reward is such a no-brainer. It's not even funny. Now, if you want to join the Perfect Income program today, you can call our team and they'll tell you that the best price currently available is $1,706 per year, which honestly, given the track record, that price is way too low. If someone put, let's say, $2,000 in the average winner, just the average week where we win, that would pay $1,800 in profit in 1 week. So that would be enough to cover the entire year in one trade, not based on a back test, not based on a simulation, based on our true results so far, which actually a lot of people have done. Greg says his first trade exceeded the program 3 times over. Thanks again. Sandy made $2,500 on her Nvidia trade. Robinson, $5,000 in profit. Jim says the lifetime price is a no-brainer. Again, the lifetime price is about $2,700. I think it's $2,900. He's made more than that on each of his winning trades in the program. Janet made $5,700 on WFC, made $1,800 on Amazon. MLN made $1,200. But since you joined me for this special class this morning, I'm going to offer you an entry level price so low you can't turn it down. Instead of paying 1,700 bucks for a full year's access, I want to invite you to get a 30-day membership, just a trial, a little taste test for only 197 today. That will give you at least 4 weeks of trades to get the ball rolling. In the most recent case, since I tried to tell you to sign up a few weeks ago on the opening playbook, we're up $17,196 in under a month. These are the real trade results. You're seeing them right here. I'm not hiding anything from you. And that's without any sort of compounding, and that includes a loser too. Again, this is straight from the live trade tracker, real results that you could have seen over the last 23 days. As a matter of fact, I need to update it. We had another 58% winner on Apple last week. So that's another $2,900 there. So don't make me twist your arm, guys. Charles B., one of the best stories I've heard. He made $19,000 in a month. Keep it coming. So now it's up to you. Will you take action today? Will you take me up on this 30-day membership to the Perfect Income Trades? We're going to get at least 4 weeks worth of trades. But again, this is a very limited offer. I'm going to drop this in here. Let me make sure this link works. I probably should have tested this first. And it looks like it works. Here we go. Click that link in the chat. That'll take you to the 30-day trial offer, or give us a call. Let them know you're on the opening playbook. You would like to do the 197 trial offer for the Perfect Income Trades. Again, you're going to get a new trade each week, 30-day access. Each one's going to target around 100% ROI per week. Each one only needs a tiny move to win. Guys, a 71% win rate on live signals, 92% average winner, and 41% average return on over a year and a half of trading. It doesn't get much better than this. Today, you can get 30-day access, entry-level price. It's going to be at least 4 of the weekly alerts, plus the bonus training materials, the options calculators, and so much more. Again, we're up $17,000 over the last 4 weeks since I did this, since I told you guys to join the last time. $17,000 in under a month. Please join today for your own sake. At least give it a try, guys. At least give it a try. Again, the Perfect Income Trade, you can lock in that 30-day special right now. So here again, from some of your peers, here's some more people. Here, LK said wrap is great, up to 73% on win rate. Ed R, he's booked quite a few profits. AVGO 121%, SMCI 121%, Meta 90%, NVIDIA 109%. Like I said, always targeting right around 100% ROI. Mark made 100% on AVGO. Ben, first 2 trades were both up 100%. Dave, every trade has been a winner, most in the high 2 and several 3-digit percent wins. Thank you. Jim T made $5,000 using the strategy. Greg made $1,400 or $1,040 on NVIDIA, did his own on gold and closed that for 100%. Again, you can lock in the membership for just $197 today for the first month. Give it a taste test. If you like it, upgrade. But I'm probably not gonna have to beg you to upgrade once you get your first couple of trades going. You're saying, I'm gonna need this all year long. Simon D, 72% on the Perfect Income Trade. MB, did the Apple one expiring tomorrow? Should be 100%. Deb, this is probably not a typical experience, but she joined the Perfect Income Trade, and in her experience, hadn't had a single loser yet at this point. Now, there's going to be winners. There's going to be losers. Look at some of the recent results, right? You can't say I didn't tell you there's going to be losers. There's going to be losers, but we're winning 7 out of every 10 trades and crushing it along the way. So go ahead, click that link in the chat to sign up now. And this will give you a 30-day trial, guys. It's 197 bucks. Not a big ask for you guys. I'm not asking for $2,000 here. 197, wow, $197 to get you 4 weeks of trades, get you a little taste test here. Now, let me go ahead and catch up in the chat. Gary, you've won every trade in the last month or 2. Is that what you said? No, Gary. I have won, let's see, of the last 10 trades, Gary, I've won 8 of them. So hopefully that's good enough for you. The net return of the last 10 trades, Gary, including the winners and losers, is 492%. Let me say that again. The net return of the last 10 trades, 492%. I guess asking you questions is a waste of time, says Ed. Ed, I'm not sure why you would think that. Hopefully I can answer your question. What wrap would I choose for progressive? Let's go take a look at progressive. If I were to look at next week's expiration, this actually should be priced pretty decent. It's because the volume is not as good here on progressive. Let's go ahead and see what the monthlies are. I've got a monthly here. I would just set your limit order Stacy, to about half the price because you should be able to get filled. The problem is that progressive options aren't the most liquid things in the world. So it's about a 10% difference on the spread there, 30 cents there. Just set a limit order and let it sit. I got filled. I actually did one earlier this week and I got filled. If I remember correctly, it did not fill instantly though. So I had to wait a couple minutes for the market makers to meet me at a fair price. Um, Ed, talk fast, ignore questions, and sell services the way you and your business rolls. Ed, I'm right here. Ask me a question. Can I trade more than one stock per week? You can. Well, I just give one a week. The other week I gave ANET and ISRG. ISRG was a bonus, just had lower volume. So I said, hey, I'm just going to set a limit order, see if I get filled. I did, ended up being 100% winner. These are not iron condors. These are exactly what I just showed you. We're buying a call and selling a call at the same time. No, nothing crazier than that. Like, I'll just show you. Oops. Here's the trade tracker. Buying a call, selling a call at the same time. Buying a call, selling a call at the same time. Give you the entry, I give you the exit, I give you everything in the alerts. And here's the trade tracker. I showed you we were up to $152,000. We're up to 154.9 now. So I didn't update last week's trade. There you see the result. Pretty awesome. There are winners, there are losers. Over time, it's just been nothing but spectacular. Actually, look at that. Account growth is up to 3,000% now. It's about over a year and a half. Again, no compounding. That's just based off 5K starting out. The profit is just outstanding. It's actually kind of unbelievable. But that's just the real results. We just track it every week, and I post it in here. One trade per week, yes. What's better, income trader on the clock program? They're both really good, Chai. AMT, what do I think about AMT? Cyrus is asking. American Tower. Oh wow, they just had earnings. I would probably wait to let this earnings news drift either higher or lower. I don't like trading immediately after or before earnings, typically speaking. I did it on Apple because it was the rule of the system, and I got burnt. So we entered Apple right after earnings, faded. Oh, it's frustrating. We're up now, thankfully, but that's why I typically like to let the news fizzle out. Now that doesn't mean that's going to always work out for you. Look at Fortinet, right? We had earnings and it drifted higher. So, but I like to just wait. Dale says, are you doing both calls and puts, long and short? Typically, Dale, it's going to be just calls. We're typically going long. If we flip to a bear market, we will go short. It's tested to do that. However, as long as the SPY is above the 200-day moving average and we're moving higher, we're gonna swim with the stream. Always on Monday, yes, yes, Mike. Always on Monday. Here, I'll post the link again. Unless Monday's a holiday, right? And then it'll be on Tuesday. Hopefully that makes sense. Can't place a trade if the markets are closed. So then it would be on a Tuesday. How often do I have back-to-back losses? Great question. Let's go see. What do you guys think? Let's go see. I honestly don't know the answer. There's a loser. There's a loser. Loser, loser. I'm looking for back-to-back though.
You tend to not have back to back. The way you designed it, you recover almost immediately. Like if you look,
Maybe.
you tend to recover like right away. You haven't had a back to back since like you started the program. You have to
I
like
found one.
go.
I found one. So we haven't had a back-to-back loser in over a year. It's been 14 months since we had a back-to-back loser. And that was the only time we've ever had a back-to-back loser.
Yeah, no, you designed it really to recover. By the way, I fixed your link so people can click on it.
Oh, awesome. Thank you. Why is there so actually that's a good question. Why is this different? I don't know. This must be a different disclaimer. I'm not sure what this is from. This is definitely not the perfect income trade. Good question. I didn't even notice that. I'll just post the most updated screenshot. The most up to date 70.7% win rate. So this is the most up to date it can get. Good catch, Dave. This is based on 5K. You can start with 500 bucks though. So if you start with 500 bucks over the last year or so, you'd be up 15,000. No compounding, just starting flat. If you blindly put 500 bucks in each trade every week, you would have made $15,000. That's pretty good. I don't know how I can make it much better than that for you guys. I don't skip half strikes in progressive now. If I take the trade and the stock goes over the target in the next 10 or 2 hours, can you exit right away? You can exit. You're not going to get the same profit. You'll probably get a 20, 30% ROI instead of 100%. Priscilla, thank you for your enthusiasm and desire for us to be successful. Thank you for tuning in every week. Someone suggested getting a trade tracker for yourselves. What do you think? Nate thought it was a good idea. Yeah, I definitely think that's a good idea. Nathan, I've been trading with Graham a while now. He's an amazing trader, great guy, very honest and transparent. Thank you, Nathan. Thank you for your generosity of giving free trade suggestions. Thank you. Brad, you're up 126 bucks. Or is that on a Lily? If you got in at 251, that makes sense, Brad. Is this similar to moonshots? Nope, this is just a weekly trade. Can you still do options trading if your account is restricted to pattern day trading under 15K? Yes. Realistically, you probably want a minimum of $500 to trade this. Let me just pull this back over here. You don't have to worry about pattern day trading because this is a week-long return or hold time. So this week's trade, 240 bucks again. Last week's was 48 cents, 250, buck 20, buck 20, 220, 25 cents. Sometimes they're really cheap, but typically around a buck 25 to enter. What's the difference between a wrap order and a lead order? Great question, Brad. Being further out of the money, that's right. A wrap order is wrapping the current price for a one-to-one risk to reward. A lead order will be a little bit more out of the money where we're going to get a little bit more upside, but probably a slightly lower win rate. In a strong bull market, do I raise the upper strike price? That's a great question. That's very similar to what Brad asked. That's where I would do an elite order. This program, I'm just doing a wrap order, guys. I'm always targeting 100% right around there every week, and I'm trying to win 7 out of every 10 trades, which we're doing on almost 100 trades now. Please explain why I don't trade earnings. Lewis, great question. I don't trade earnings. And I shouldn't say don't. I do trade earnings for fun. For fun is the keyword. But like Nvidia is expected to move $12 in either direction. So Nvidia is expected to go either all the way up here or all the way down here overnight. Guys, I don't know what Nvidia is going to report. I don't know if they're going to say they're increasing revenue or not. It's a guessing game with earnings. Versus if you're trading a stock like Lilly, no earnings coming up, and it's just drifting higher. Good trending stock. It's popped above the 200-day moving average, filled the gap, looks to be going higher. That's where I'd like to trade a stock like that. Or you use a Newton scanner, find stocks that are breaking out with higher momentum. That's what I like to trade. $500 trade, profit of 15K since this year. It's Priscilla since October of 2023, so about 16 months, Priscilla. So if you started with $1,000 a trade, we're at $30,000 in profit. Dave says this hour and the Thursday hour are the most profitable hours I spend each week. Thank you, Dave. Thank you for the kind feedback. Is wrap or elite order better if another trader in your office says go long the stock in and out the same day? Grumpy, that's up to you to decide. If like for example, maybe you're referring to a day trading system, like maybe Roger, he's got a great day trading program. If I were to do a day trade, I would probably use an elite order because it's the options are going to be more sensitive to the price movement. So if I use an elite order, if I go slightly out of the money, if I know I'm only holding it for a day, it's going to be a lot more sensitive to the price movement. Perfect income similar to opening playbook, Sheila. It's my premium service where I do this for you guys every week. Every Monday, you get my number one pick with the options criteria selected, all calculated out for you, ready to roll. Every Friday, I follow up with exit instructions. The opening playbook is more open-ended. I give you entries. I don't follow up for exits. It's not a premium service. It's a free thing I offer for you guys to hopefully give you guys value and training and some money-making opportunities is ultimately my goal. Priscilla, could I repeat the answer to your question? Let me go back to your question. Okay. If you started with $500 per trade, the profit's at $15,000. That's since October of 2023. So about 16 months. If I'm doing the math in my head right. About 16 months. So $500 has churned out $15,000 in profit. Pretty nuts. If you start with 1,000, that's 30,000 in profit. Here, this is showing if you start with 5K. So 5K is at 154,000 in the last 16 months. Again, this is not compounding. If I were compounding this, this number would be just absurdly big. No problem. Dave, about typically one per week, Dave. One trade per week on Monday. It's not meant to be overwhelming. It's meant to be very simple for you guys to follow along. Place one trade per week, and hopefully we're right and double our money. Now, my expectation, and I can't promise future returns, Dave, my expectation is that we're going to win three and lose one over the next month. That's my expectation. In which case, that means you would net about 200% over the next month. Because if you win 300% and you lose 100%, takes it out, you got a 200% net gain over the next month. I can't promise future returns, but that's what our trade tracker has been doing so far over the last year and a half. Priscilla, compounding means adding the profit to the next trade. Yes. So again, this is not compounding, meaning we're not adding our profits into the next trade. This is just flat investment. Throw the same amount in every week. If I were to do compounding, this number would be much, much bigger. I don't want to make it any bigger. It's already a huge number. It's already to the point where I just sometimes look at it and say, people are going to think there's no way this isn't possible. I'm making up. I'm not making it up. I can't make it up. It's just a trade tracker results. So it's not compounding. This is as simple as it gets. Hopefully you guys take me up on it. Not, no worries. I'll come back in a couple of weeks and let you know how much we're up since the last time as well. Just like I did this time. But I feel like I'm twisting your arms, but I think I'm doing it. I hopefully you see I'm trying to do it for the right reason to get you guys in on probably the most consistent strategy that I know of. Very simple, very easy to get the ball rolling. But with that said, guys, I'm going to go ahead and tune out for the day. Thank you all for being here again. Signing up, awesome. Again, Thursday, we're going to do our normal market outlook at 10 a.m. Next Tuesday, I'm going to swap the day. So Tuesday next week is going to start being our market outlook for the week, and Thursdays will be our strategy day. So this week we covered the wrap order. Next Thursday we'll cover something else. So thank you guys so much for being here. We should have a replay for you guys. Yes. When do you get the trade on Monday? Typically it goes out before noon on Monday. See you guys on Thursday. And actually, I should mention tomorrow we have a special NVIDIA event at 2:30. It's a roundtable with I think Roger's going to be there. Jack's going to be there. Kane, I believe Nate, myself, we're going to talk about NVIDIA going into earnings, probably give you some free trades as well. So make sure you're there tomorrow at 2:30. And if not, I'll see you Thursday at 10 a.m. Eastern. Catch you guys tomorrow, hopefully. See you guys.